Hello everyone, I'm Emma Beynon from the tax team at Kreston Reeves, and this webinar is going to look at the tax measures that have been brought in for self-employed individuals in the light of COVID-19. The main measure is the Self-Employed Income Support Scheme. We're going to look at that in some detail to the extent we have some details, and then briefly some other tax-related measures and comments on some grants and other support that's available relevant to self-employed individuals. And finally, to wrap up, some key action points for the current period. So the Self-Employed Income Support Scheme is essentially a government grant to cover up to 80% of the average monthly trading profits of a self-employed business up to a maximum of £2,500 per month for the months of March, April and May 2020 at the moment. And the aim of this scheme is to really align with the measures that have been put in place for employees through the job retention scheme, where their arrangements allow employers to claim up to 80% of the gross pay that those retained employees are getting up to the maximum of £2,500. Initially, this scheme wasn't made available, and there are some recognised difficulties in terms of the information that's held about the self-employed sector in terms of up-to-date information when compared with employees, where you have real-time payroll reporting. But now we have this scheme, and whilst we haven't got all the details, it is shaping up to be a similar structure which will allow a grant to be received by affected businesses over initially this 3-month period. So taking a look firstly at the eligibility conditions. So a self-employed individual can only claim the grants if they meet all of the eligibility conditions, and some of them refer to the historical trading profits of the business and some of them reference the current position. So firstly, the individual must be either a self-employed sole trader, so on their own account by themselves, or part of a trading partnership. Secondly, there are thresholds for the level of the trading profit. If the trading profit is below £50,000 for the year, either in 2018-19 or that the average annual trading profit for the previous 3 tax years, so that's 2016-17, 2017-18 and 2018-19, averaged across those 3 years would be below 50,000, then that threshold is not broken and that eligibility criteria is met. The second eligibility condition is the trading profit threshold, which is set at £50,000. So an individual would have to have trading profits of below £50,000 either in 2018-19 or average trading profits of below £50,000 for the 3 tax years 2016-17, 2017-18 and 2018-19. In addition, having profits below £50,000, those profits must represent more than half of the total taxable income of that individual. So if you have taxable income which is principally comprised of rental profits and salary, and self-employment income only makes up a very small fraction of your total taxable income, then that eligibility criteria will not be met. The self-employment income must be more than half of your total taxable income. The third criteria, as I have it here, is that you must have filed a 2018-19 tax return with self-employment income in there. This is partly because HMRC need a reference point to base their assessment of eligibility from, and this is the most recent information they have. 2019 tax year had not completed when these measures were being brought in. So 2019-20 information has yet to be submitted to HMRC. So we have 2018-19 as being the most recent information that HMRC holds. However, HMRC do require, as part of their eligibility, that a claimant is still self-employed and trading in 2019-20 and continuing to trade into 2020-21, subject to the COVID-19 restrictions may have affected the ability to trade. And finally, a loss must have been suffered as a result of the COVID-19 measures. This grant is only available to businesses who have been affected by COVID-19. So if you are so fortunate as to have been unaffected in your business, then this grant should not be applied for. Now we can look at the application for the grant and the timing of that. We don't have full information in this area at the moment. It's fair to say this is a fast-moving area at the moment, as HMRC are bringing together their processes and releasing information all the time. But we have an overview. Essentially, HMRC are going to review their records, and they will be the ones who contact eligible taxpayers, not the other way around. Once you have been contacted, that will tell you that HMRC have assessed your historic position and you meet those eligibility criteria for the historic position, and it's then up to you to make the online application for the grant. It's my understanding that in that approach from HMRC, there will be an indication of the level of grant that you can apply for. We know that the Job Retention Scheme application form has been set up and should be opening at the end of April. And so we're optimistic that the self-employed equivalent platform will also be up and running by mid-May as aimed for. The actual payment itself, subject to a successful application, would be made as a single lump sum payment in early June. The grant level is 80% of the 3-year average monthly trading profit, up to a maximum of £2,500. There's some supplementary information that's now coming out from HMRC if you're in certain sectors or if you don't have the full 3 years. So there is scope to have an idea as to the level of potential grant you could claim based on the information that's now coming out from HMRC in terms of that calculation. Just a reminder there that there is no application possible if there is no 2018-19 return. So if you are in that situation, then your priority should be making a return before the 23rd of April 2020, so that your information can be reviewed by HMRC for this purpose and you have the potential to have access to the grant. HMRC have also confirmed that they are using the information as at 26th of March 2020 for returns that are already submitted. So there is no scope for an amendment of a 2018-19 return to be made now to change the level of grant offered, even if you have become aware of an amendment that would be required. One concern that has been raised, and as yet we don't have the detail, is clearly HMRC have a huge volume of information to process, and there's a distinct risk that certain taxpayers may be eligible but are missed by HMRC, or that their contact details are out of date. And so we're hoping that we will get some information from HMRC about how that would work in that event. Could a taxpayer approach HMRC to ask them to review their records and join the scheme because they're aware that they are eligible? Once the application has been made and the payment's been received, the grant payment itself, it effectively forms part of the taxable income of the business. So down the line, when the business is preparing its accounts and when you are doing your self-assessment tax return, that grant payment will form part of your income from that for that business in the tax year. So how that grant ends up being taxed will completely depend on the results for your business for the rest of the year and your other taxable income, because both of those things will affect your tax rates and the allowances that apply. So that was Self-Employed Income Support Scheme in an overview. I just wanted to slip this comment in here because I am conscious from a number of conversations I'm having with clients and contacts that some individuals who trade as contractors through a limited company that they own think that they will be caught by these self-employed rules. Quite naturally, they describe themselves as being their own boss, they work in their own business, and they feel self-employed. But for tax purposes, contracting through your own limited company means you are not self-employed for tax purposes. You are a director and a shareholder of a company, and it is the company that is contracting, and it is the company that is being taxed on its trading profits. Okay, so what that means is that the Self-Employed Income Support Scheme would not apply in this situation. The Job Retention Scheme might apply if a shareholder director has been furloughed, but that has its own complications. But to be clear, to be self-employed, there can't be a limited company that's contracting with your customers and building up the trading profits. A self-employed person has the trading profits as part of their own taxable income. The IR35 rules that were applying to these subcontractors have been delayed to April 2021, so there is that slight upside. Okay, back to self-employed individuals. What else is there in the measures that could also help? So there are some tax deferral measures. VAT deferral, so for a VAT registered business, there will typically be quarterly filing of returns and quarterly VAT payments. And what the arrangements here are allowing is that if you have a VAT payment that's due between the 20th of March 2020 and the 30th of June 2020, that can be deferred until the end of the financial year. And the financial year here is the VAT financial year, so it's round to next spring effectively. There's no application required, and you can still pay as normal if wished. This is only a VAT payment deferral. This isn't a VAT return filing deferral, okay? So you still need to file your VAT returns by the due date as normal. This is purely about the payment. Similarly, for income tax deferral, so as a self-employed individual, you will be paying payments on account in advance of filing your tax return based on the tax liability of the previous year. And there are 2 payments on account and 1 final payment. So you will have paid the first payment on account on the 30th of January for your 2019-20 tax year. And the second payment on account of income tax was due, or will be due officially, on the 31st of July 2020. And what this measure has enabled is that that payment of income tax is now automatically deferred until the 31st of January 2021, when the final payment would have been due. So The second payment on account and the final payment will both be due on the 31st of January 2021. There'll be no interest charged on that deferral. And again, no application is needed. It's assumed that this is going to happen. HMRC are not averse to anyone paying their tax by the due date as before, but there is no requirement to do that now. This applies to all individual taxpayers, not just the self-employed. Initially, when the first announcement was made, there was some confusion as to whether this was only for people with self-employed income reported on their tax return. But no, this is applying to all individual taxpayers, not just the self-employed. Please, though, remember that with both of these deferral mechanisms, what is happening is you're just pushing those payments through into 2021. So in 2021, notwithstanding any other changes, there will be some higher tax bills that will need to be met. Other tax measures and grants and support that are out there. This is not an exhaustive list by any means, but these are some particularly relevant areas. One real cash flow benefit that may apply to some individuals is if you had previously disapplied child benefit because your income or your partner's income was going to be over 60,000, you may wish to restart child benefit and get that improved cash flow up front. Even if you have to ultimately repay some or all of that child benefit through your self-assessment tax return for 2020-21, that won't be due until the 31st of January 2022. So there is a real cash flow benefit to considering reinstating your child benefit payments. That is an application online, and it needs to be made by the original claimant of the child benefit. It can't be made by the partner of that person. It's the original claimant. Time to pay is a structure that has always existed in HMRC, but what has happened in response to COVID-19 is that HMRC has massively increased the staffing of its debt management teams to enable more taxpayers to make time to pay arrangements. And this can be in relation to any type of tax debt, not just those that have resulted from the restrictions that COVID-19 have caused. So for taxpayers who have existing tax liabilities that they are not going to be able to pay when they fall due, there's a mechanism now for a structure to be arranged where initially maybe payments can be deferred for some months, and then a payment arrangement, a payment plan can be agreed with HMRC in recognition that those amounts do need to be ultimately paid, but over a longer time frame. And those applications for a time to pay arrangement are made over the phone. And finally, more generally, for small businesses which get small business rate relief, there are business grants of £10,000 typically, and the applications can be made for those locally. In terms of loans rather than grants, there are business interruption loan schemes, and those are available through participating banks. In addition, as the sort of final safety net, I feel I should mention universal credit, which has always been available to the self-employed, especially where income levels are low. It can be claimed. It's not only if there is no income at all. However, I would just mention that claiming universal credit does can affect things like time to pay arrangements. So if there's a payment being made out under universal credit, that may be slightly reduced to allow for an amount that was previously under a time to pay arrangement. So finally, to wrap up, thinking about action points and a summary of where we are at the moment. Firstly, I'd recommend to all self-employed individuals that they take a look at their historical tax position, either themselves or with the help of their accountant or tax advisor, for the last 3 tax years and consider whether they would be eligible for the grant. It's worth noting that if your trading profits have been too high, then there is no support under this scheme. So if that threshold of 50,000, if you're over that, then there isn't any grant available under this scheme. So making sure you understand whether you are potentially eligible and that you can have an expectation that HMRC will be in touch with you. Then, are there any other measures which can help with cash flow? What other obligations, liabilities are there that can be managed? And are there some measures already out there that can help you improve your cash flow or reduce your cash outflow? And finally, depending on the results contained within it, but it may be that by submitting your 2019 tax return as soon as possible, now you've passed the end of that tax year, that if you're in a tax repayment position on that tax return, then that's obviously another positive cash inflow that you can trigger. So to summarise in terms of what's there for the self-employed income support scheme is this lump sum grant to support self-employed businesses with profits of £50,000 or less per year. And it's HMRC who decide which taxpayers are eligible, and there is no support for newly self-employed individuals, so those who started trading during 2019-20 or those in 2021. It's a maximum grant of £2,500 per month, and that's initially just for the months of March, April and May 2020, although I'm sure that will be reviewed as time goes on. So given that the grants are at the level they are and that payment on that grant, if you are eligible, is delayed until June, then we are looking at potentially other sources of support in terms of tax deferrals and maybe loans and other grants to help in the interim. So that's the end of this webinar. Thank you very much for listening. I hope you found it useful, and I wish you a safe and well summer. Thank you.